The third quarter is behind us, but what a sour end it was. To sum it all up, three major averages fell more than 10%, putting in their worst quarterly performances since the 2008 financial crisis. The Dow Jones Industrial Average lost about 12% this quarter, and the S&P 500 was down more than 7%. The Nasdaq plunged over 12%. Today, the Dow lost 241 points, and given all the window dressing taking place this week, the index probably would have finished even lower. Bank stocks plunged, with Bank of America suffering the most. The bank shares were down 42% for the quarter. Today, investors punished Morgan Stanley as they tried to figure out just how exposed it is to Europe's debt troubles. Shares there plunged 10% in today's session alone. This month has been a story of intense volatility. The CEO Volatility Index hovered above 30 for most of September. Bond prices as well wrapped up a tremendous quarter with a rally today. On our last check, yields on the 30-year bond were at 2.9%. The increased demand for long-term treasuries comes right before the Federal Reserve kicks off Operation Twist next week. What weighed down sentiment today were downbeat economic reports from overseas. Eurozone inflation jumped in September, and that cooled hopes that Europe's central bank might lower interest rates next week. Meanwhile, manufacturing activity in China contracted and stoked fears about a Chinese slowdown. Some of the U.S. economic data coming out this morning was strong, but not strong enough to counter the worries about a slowdown. Consumer sentiment has eased off a 3-year low, but income levels in August fell for the first time in nearly 2 years. We turn a new leaf next week with some of the earnings coming up for October, but given how bad the recent market rout has been, investors are not likely to put the fear factor behind them.